is a public announcement which was made in December.
Well, hello and welcome to Bloomberg Quint. We are joined by the management of Galaxy Surfactants, Mr. U. Shekhar, the managing director of the company, to take us through their Q3 results. So thank you so much for taking the time out and speaking to us. Coming to your quarterly results, it was a mixed quarter because while we have seen a 14% growth in the top line, margins have slightly come off on a year-on-year basis. Touching base with the revenue growth, sir, could you help us understand what has been the underlying volume growth and which are the segments that have aided this performance?
See, for the 9 months, I think it is better to talk about 9 months because you can do away with the volatility of quarter to quarter. So as far as the 9 months are concerned, our volume growth has been 7%, despite a slowdown in Egypt. India has been on a roll for the first 9 months of the year and is expected to continue the tempo for the full year and then going forward. So India volume growth has been almost about 13%. Our growth has been 13% against the home and personal care industry's growth of about 10.5%. So we have grown about 2 to 3% higher than the market growth as far as India is concerned. Rest of the world has been again a very significant performance for us. We have grown by about 29% year on year for the first 9 months, rest of the world, driven by the work that we have done over the last 3 years. And most of this growth has come from the specialty ingredients. Egypt has been a slow market for us. However, the rest of the Africa, Middle East, Turkey region, we have grown by 9% year to date. So I think this has enabled for us. This is purely out of our business model, which has enabled us to be face this situation with resilience and then come up with growth which is higher than the market growth. So we've also turned our attention to other countries in the Africa Middle East region. We have added about 6 other countries in the Africa Middle East region, which has enabled us to have a growth in the Africa Middle East region other than Turkey.
One key anomaly that I could see is the 30% jump up in the other expenses. Could you help us understand what these other expenses are? Is it a one-off? Because similarly, that has an impact on your bottom line as well.
No. All these are largely translation effects, okay? Which gets neutralized as far as when you look at the consolidated picture or something. Okay. In any case, the costs are because your Egypt cost gets translated because of the dollar rate. Okay, the dollar depreciation compared to the previous year. Okay. So otherwise, the costs have been pretty in line. Okay, pretty in line. The one, of course, thing which we mentioned in the Q2 was there was some increase in freight costs because of the transport strike which happened almost for a week or so. So that impact we had in the quarter 2, but not in the quarter 3.
So you mentioned about Egypt being a pain point for the company. Do you see the region stabilizing over the next couple of quarters, or do you see further pain going forward?
No, there is a gradual, recovery which is happening, and that's the reason why we have, looked at countries other than Egypt also in that particular region. Okay.
Right. So then, are you suggesting that with the other countries also in which you expand your operations and with the strong growth in India and the rest of the world, are you likely to perform better both in terms of volumes and margins going forward? And what would that band likely be?
Yeah. I mean, see, as we have always maintained, we will grow ahead of the market growth. If you look at the global growth of the home and personal care industry, it has been at anywhere from 1 to 3% or so across the globe. The major multinationals have reported either, when I say major multinationals, it is Henkel, Unilever, Procter & Gamble, and your Colgate. Colgate has talked about a volume decline at about 0.5%, whereas the other companies have talked about a growth in volume of anywhere from 1 to 2% or so. So against this global growth, we have grown ahead of this global market growth. So across the various markets.
Okay, sir. Lastly, a word on your specialty care products business. It still is, generating only 37% of your overall revenues. What are the kind of growth opportunities that you're looking there, and to what extent do you look to scaling it up to?
See, we have had a significant growth, but as I said, however, we would not look at the percentages. For us, both performance surfactants as well as specialty ingredients matter. And as a matter of fact, we are creating capacities in Jagadia, which will go online by April 1st for performance surfactants. And so what is important for us is the volume growth both on these categories rather than the percentages. Of course, as far as this year, the percentage was 63 to 37 for performance surfactants to specialty ingredients against last year's 65 to 35. But this is just a number, okay? Going forward, it will always, in one particular year, your percentage for performance surfactant can even go up. But what is important for us is the volume growth on both. And that's how we measure ourselves.
So the reason I actually ask you this is because the specialty care products business, that is a niche segment and has higher margins as well. So the general perception would be you'd want to scale up this business in order to, improve on your margins as well. So are you looking at, expanding in this business? Any new facilities that will be coming up over the next 1 year?
Yeah. We are considering certain, capexes as far as specialty ingredients is concerned. But more of this will get, it is still in the drawing board. It is still in the state of preparation.
Okay.
But they will start getting crystallized in the coming year.
Okay, so you are looking at expanding your capacities in the specialty care business.
Yeah.
Okay. Sir, we leave it at that. Well, it was great chatting with you, and all the very best for the coming quarters as well.
Thank you very much. Thank you.